Okay, so let's unpack this. We're doing a deep dive today into Party Airtel, and we have a very specific mission for you. Figuring out if this stock is really worthy of being called a lifetime investment.
hmm
Now, if you're still thinking of Airtel as just, an Indian mobile phone company, you're kind of missing the picture now. It's really transformed into more of a diversified digital utility
hmm
built on four pretty distinct high-growth pillars. You've got India Mobile, of course, then the huge reach of Airtel Africa, Airtel Homes, and also their business division, which includes Nextra data centers.
Right. And what's fascinating, I think, is that the bedrock, the real cash engine funding everything else, it's still India Mobile. Their core strategy there is all about premiumization, which, simply means getting customers to move from older 2G onto 4G, 5G plans and spending more.
And the metric everyone watches for that is ARPU, the average revenue per user. Management's got this key target, 300 rupees ARPU. They actually hit 250 rupees in Q1 FY26. And analysts seem really bullish, expecting maybe a 15% industry-wide price hike, maybe December 2025. That could push them right over that magic line.
Yeah, and look, the main argument for the bull case, for why they're seen as best in class, it comes down to management credibility. They made basically three big promises years ago: lift ARPU, moderate their capital spending, and cut down debt. And honestly,
Sure.
they delivered perfectly. They hit their peak 5G investment, meaning the really heavy spending phase is essentially done. And now they're pivoting right on schedule towards generating massive free cash flow.
Right. And the result of that discipline is what people are calling a fortress balance sheet. Their debt compared to their operating cash flow, that ratio is down to a multi-year low, just 1.26x. That kind of financial strength, it's not just about being safe, it's the fuel that lets them grow those other two sort of hidden gems, Africa and data.
Exactly. Take Airtel Africa. Its fintech part, Airtel Money. It's absolutely booming. It's now processing an annualized total process value TPV of over $193 billion. Just for context, I mean, that's a flow of money roughly half the size of Ghana's entire GDP. It's huge. And its planned IPO, first half of 2026, that's going to be a major catalyst for unlocking value.
Okay, and then there's Nextra data centers. That feels like the real long-term, like decadal growth engine. They're putting $600 million in right now, aiming to double capacity to nearly 400 megawatts by, end of 2027? And that kind of infrastructure investment is basically why analysts are forecasting at least a 15.6% EPS growth rate compounded for the next few years.
Okay, I have to jump in here, though. We've laid out this really strong bull case, the flawless execution story. But the stock itself, it's currently the most expensive global telecom stock out there. Trades around, 41, 42 times trailing earnings? That kind of premium means the market has fully priced in perfect execution. So what if something goes wrong? Where's the immediate risk, the thing that could trip them up? Right. And this is where the risk connects to the bigger picture, specifically regulation. The single biggest immediate threat, it's the regulatory overhang from an upcoming Supreme Court ruling, October 2025. It's about these adjusted gross revenue dues, the AGR dues, and it's creating a potentially really skewed playing field.
Ah, yes, the AGR issue. So the court already gave a sort of lifeline to their competitor, Vios, right?
Yeah.
Allowing their dues to be looked at again. But the analysis suggests Airtel probably won't get any similar relief on its own huge AGR liability. We're talking 40,000 crore rupees. That is absolutely not pocket change. It's a massive sum they're legally on the hook for.
Exactly. So it creates this asymmetric situation, a really tough spot for Airtel. They face a kind of binary choice. Either they're forced to pay this massive amount, which obviously puts them at a competitive disadvantage, almost state sanctioned, or the government might let them convert those dues into equity shares. But that means significant dilution for anyone holding the stock right now.
So wrapping this up, what does it all mean for you, the listener? You've clearly got a company with strong structural growth trends, fantastic execution, really high growth assets. But because of this specific regulatory issue, it's just not a clear lifetime investment right at this very moment.
That really is the crux of it. The near-term risk from this unresolved AGR situation, it's binary, and it makes the current high valuation feel precarious. However, and this raises an important question, maybe a final thought for you, if this uncertainty does cause a major market wobble or significant weakness in Airtel's stock price, well, that specific moment should probably be seen as a potential generational buying opportunity, a chance to get into what is fundamentally a best-in-class digital utility at a much better price.